One of the world's largest restaurant chains, Subway, selling itself to private equity firm Roar Capital for a reported price tag of nearly $10 billion. The sale makes Roar Capital one of the largest restaurant operators in the world. Names like Sonic, Dunkin', Carvel already in that portfolio. Joining us now exclusively to discuss the deal and the state of the consumer is Subway CEO John Chidsey. John, it's good to have you. First on the deal, this auction process has taken months, I don't know, maybe even years. It feels like it's been a while. What took so long, and how did you get to this deal?
No, I think part of it was, as you well know, you guys talk a lot about, it was, a difficult financing market giving all the rate increases, and then just the size. It is a large private equity deal, so when you think about the size of the equity check required, there were a lot of consortiums bidding, and so I think that complicated the process a bit, that and the sort of the macro environment, as I said.
Will you stay on board leading Subway, and what sort of changes do you anticipate?
Yeah, I think one of the things that really enticed a lot of the bidding groups were the management team and sort of the turnaround that we've been on. I would argue we're sort of out of the turnaround phase and more on the growth trajectory, but I don't really think you'll see any changes. I think, we're going to continue to work on menu innovation. We're going to continue to work on modernizing the rest of our restaurants in the U.S. and abroad, improving the guest experience, and then maniacally focusing on the international growth, which we've talked a lot about, which I think Subway has a tremendous runway there.
Just one more on the deal. How do you feel about Rourke, which I showed some of the names in the portfolio, but they own Jimmy John's and Schlotzsky's, which are pretty direct competitors to Subway?
But, the great thing about franchising is franchisees, set their own pricing, and, consumers visit all kinds of QSR brands. Nobody's, maniacally, as much as we'd love it, they don't just focus on one brand. And I think the benefit of this private equity firm is they understand franchising well, so they understand, the issues we face, and I think they'll be a great partner for us.
Hey, John, I wonder how you're thinking about the evolution of the, at least the physical model. There's an interesting piece in the trades today about Whataburger opening their first cashless and seatless digital-only location. Is that the future?
It may well be, and I think there are places, outside the U.S., when you look about Scandinavia, where things are incredibly digital. You look in places in Asia. So I think we've got lots of places we can go try things and learn, even outside the U.S. That's the beauty of having a brand that's in 100 countries. And so I think we'll try lots of things in different parts of the world and see where we get adoption the fastest, and throw things against the wall, see what works and what doesn't. So yeah, I think that is pretty much where the world is heading. I don't tell you how fast, but I think it's going there.
Yeah, I mean, Australia is always famous for getting a lot of, say, McDonald's toys first before they go to Europe and maybe here. But I guess, do you see the U.S. becoming a bit more of a laboratory than it has been in the past?
I do, but obviously, given the scale of, most of the large QSR players in the U.S., as you said, there's a reason people try things in some of the smaller countries. So if you inadvertently break something or do damage, it's not quite as impactful. But yes, I think more things will be tried in the U.S. because it's clear we're moving in that same direction.
You mentioned that you've been executing this turnaround here and are seeing double-digit growth in Subway and are near the end of it. I'm curious what the new Subway looks like. Carl and I were reminiscing about growing up with the $5 footlongs. Feels like we're a long way from there.
Yeah, I hope that we have enough things that would remind you of the Subway of the past. But, as you said, we've got 10 straight quarters of sales growth, and we're just about to complete the 11th quarter. And, Subway hasn't done that since 2010 to 2012. So I think we definitely have it back on the right trajectory in the U.S. and globally. Our sales are up globally, same run. But, things like Subway Series, I think, was big because, as you know, millennials and Gen Z, a lot of people, they don't like to engage verbally. They like doing things digitally. And I think having the brand where you can still customize if you want, but you can also order, I'll take the number 5, the number 10. I think that's really a step in the right direction, given third-party delivery, digital, as I said. So I think we can kind of play both sides of the street. And hopefully you would say this is the Subway you love, but it's got a lot of new things to offer as well.
And just finally on the deal, any concerns about antitrust approval or review?
No. Again, I think franchising, the beauty of franchising is, I came from a world where we had Century 21, I guess today it's called Realogy. I was there at Senate a long time ago. We sold a lot of houses, and our franchisees all competed against each other. And I think restaurants, the same way like any franchising, they're independent contractors. They hire, they set pricing, et cetera. So I don't expect any issues there.
Got it. John, really appreciate you coming on to talk us through the deal and the strategy.
Thank you for having me.